we just don't know a lot about whether it be the financial end, whether it be how to go in and buy a car, sometimes how to select a car. We use our friends and family members, and 9 times out of 10, they don't know. Then we
And
start
so,
talking about how much money down would actually, cause that payment to be, to move one way or another.
now,
So,
so you go in that little room.
right.
When you go in that little room, is that the guy who makes the most money at the dealership, the finance guy, because he's adding on plans? Vince McCarver, you in Michigan.
Right.
People in Atlanta go and look for cars. Why should they call you? If you online in Michigan and they looking at cars here, why should I call you? I got a guy right here. What are you gonna do that they're not gonna get? From the talk from Forbes magazine, Forbes online, and a lot of other things that I see out here. And the way you feel too is that the economy is bad. People are not making the same amount of money that they used to. This will probably be the most, in the comment section on this question here. Was the interest rates better when Republicans in the office or Democrats?
If you are 800 score, Tony, that's not even a guarantee for you to get under 5%. With an 800 score, and there's very few 800 scores out there. Because when you charge somebody 25% and you give them a car with, high miles on it, guess what you're doing? You're burying that guy.
When you get a cosigner,
yep.
Are you looking at the cosigner's credit or are you looking at the income of the cosigner? All right, so welcome to another episode of Elite Psyche, the Mental Toughness Show. On this show, we talk to people about being mentally strong and elite. So any individual that I talk to or that we talk to on this show they're doing something special. And today I got my partner, Mr. Vince McCarver. I've been knowing Vince for almost 20 years now, if maybe longer. And I just want to talk to him today about what he's doing, and because he has the experience to talk about it. And we want to get straight to the point, get right to the meat and potatoes. So we want to get this video out to everybody. And so Vince, welcome to the show. And let's jump right into it and tell us a little bit about yourself and what are you doing and what you want the world to hear about.
Well, thanks for having me, Tony.
Okay.
Actually, you came right on time because I'm 64. I've been in the business that I'm in auto sales for 34 years. And number one, I love it. Ever since I've known you, I've been doing it. But you know what? What I've come to find out over the years that I've been involved, especially now looking through the rearview mirror, a lot of people don't know a lot about it. At least a certain demographic of people don't know a whole lot about it. So I really wanted to kind of like get into explaining, a little bit of, what goes on in the business, what you should look out for, the things that you should be trying to learn as you go along and going to buy an automobile.
Okay. So now, and what you do, you can help anybody from anywhere because everything is like virtual now. So we're going to make sure we put at the end your contact and how to reach you and what you're doing. So let's jump right into what are you doing? Where are you located first? And then let's talk about how you can help people and why you want to do it and what you're doing with that.
Okay. So I'm in Michigan. I live in Ann Arbor, Michigan. I work probably about 45, 50 minutes away from me in a little town called Adrian, Michigan. Mm-hmm. For those of you that don't know, Ann Arbor is just about 35 minutes west of Detroit. Okay. I've been in car sales, like I said, about 34 years. But what I've come to find out of late is that we just don't know a lot about whether it be the financial end, whether it be how to go in and buy a car, sometimes how to select a car. We use our friends and family members, and 9 times out of 10, they don't know. And so over the last, few years, I've really been just educating my customers when they come in on the right thing to do. Because Tony, think about it, I'm 100% commission.
Mm-hmm.
So rather than start over all the time, sell somebody a car and then divorce them right after it, you have to, give them something to come back for. So I give them an education on how to do it, so that, when they go meet somebody else, they'll say something off the wall, but, they'll remember what I said. And more times than not, that works because people end up coming back or sending their family back for me to build my business and them to, number one, understand what they're doing and why they're doing it.
Okay. So give me a good example of somebody who didn't know what they were doing and I guess got taken advantage of. Now here's the thing. If you selling cars too now, I mean, your goal is to sell. So if somebody don't know anything, I mean, that's the way the world is. Capitalism says, okay, hey, you just lost out. You just didn't know.
You know what? I love the way you preference that, Tony, because you are right. However, if you build value in what you're doing, you're getting paid for the value that you've given someone. So when someone comes into me, I got to build value in everything I've done. You know what? They say once you increase the value of said item 1 penny past the asking price, you've made a sale. Mm-hmm. So when a person comes in, so the example you were asking me, I'll give you a perfect example because there was a guy that came in just yesterday. He purchased a car from me. He had never purchased a car before. His mom came with him and she knew just a little bit more than he knew. Okay. However, I was able to describe to him the process in the sale and, give him all of the different things, build value in the different things I wanted him to listen to. I'll give you an example. When you come in, you're going to meet me and you're going to tell me what you want. Mm-hmm. I'm going to sit down with you and, go over a few vehicles that you want, maybe ask you a few vehicles about the car that you have now. What do you like most about it? What do you like least about it? We move in, we got to find out, somewhere along the line, we're going to need to find out, how much money you are looking to spend. You're also going to need to find out, have you bought a car before? So there's a lot of different. So this guy had never purchased a car before on his own. He's been handed down cars. He's going out on his own. So we went through the process. He liked the car. We talked about financing. He already had financing already set up, but he happened to be financing through somebody we already knew. So a bank that we were already partnered up with. So Tony, when you go into a dealership, that dealership has the ability to go in and they might be signed up with a multitude of different banks.
Right.
So this bank just so happened to be a local bank and he had already been somewhat approved down there. Well, he still didn't know how the numbers would come together. So I expressed to him how the numbers were going to come together. Then we started talking about how much money down would actually, cause that payment to be, to move one way or another. Mm-hmm. So that example was, he really didn't know anything, but Tony, he could have gone someplace without knowing anything and had somebody knock his head completely off, like you said.
Well, that's what I'm saying. Give me that example. What could you have done if you're not the guy that you are? What could you have done to him that, like you said, he would have got, as we say, he would have got.
Right.
Right. So, what could you have done to do that you didn't do?
So I could have raised the price of the car. So had he not been online, I could have raised the price of the car, right? Secondly, I could have told him I needed more money down when I really did it, okay? What would that have done? Then I could raise the rate. The banks will allow us to move that rate, kind of like
how would that help you?
I get paid on it. Yeah, I get
So
paid.
if you raise the rate, let's say the interest rate was 8% and you raised it to 12%, how much more money would you have made?
So not an exact science on that for anybody to understand. However, that means I'm gonna get paid on 4 points of reserve out of the back end, right? That depends, Tony. That comes down to how much they spent on the car. So if he's on a $50,000 car, that's a pretty sizable amount of money that we can make.
But why would you take that chance to get him when he might just bag out of?
Well, so again, there's a road to the sale. So that road would mean you need to walk out and meet somebody. That's called a meet and greet. After the meet and greet, you're going to lead them to your desk. You're going to sit down and you're going to counsel with them. And at that counseling, you really are trying to find out what they know. A lot of people are doing that even with a form. And in that form, it just says, have you ever bought a car before? What kind of car did you have? What did you like most about it? What did you like least about it? So all of that is so that we can actually kind of like steer you in the direction that we want you to go. Because remember, if I'm asking the questions, I'm controlling the sale. Right. So that's where a person can get got. Tony, we had something a long time ago that we learned even in network marketing. And it was like people buy on what? Emotion.
You're right.
They buy on emotion, they back it up with logic.
Right.
Logic goes out the window. A guy comes in looking for a car, and all of a sudden, he's looking. Now, once I find out his mode of operation, I might have him in a scat pack. And now he really loves that car, I can raise my price as high as I want to. And that's what a lot of people do. They get in, they get you to fall in love with something, and then all of a sudden, the wheels come off for you if you don't know what you're doing. You don't know how.
Yeah, of course. And I probably would guess that you got salesmen that once they do that, they brag about that once the customer leaves. And go ahead.
Yeah. Can I tell you a quick story?
Go ahead, please.
All right. No names, right? I had a young man come in, and I'm doing the right thing for him. I didn't have the car he wanted, but there's some deals that were coming up because the month was about to change. Well, this particular gentleman didn't wait on me. He ended up going to another dealership. Well, at that other dealership that he went to, he got taken advantage of. And then the salesperson that did that told somebody else, but they told him way too much information. So there's a protection when you come in there that your financial information cannot be shared outside of your finance office, right? So a sales manager came back and told me I lost a sale, but he told me some other things about that kid that he shouldn't have said to anyone. I called the kid up and told him. Well, that kid went back in and got his car back and threatened to sue them for divulging some of his information. So he came back and bought a car from me. So exactly what you said, he went out bragging about the amount of money that he had made on that kid and used some loose terms.
So did he know that you're the one who told the kid?
Yeah. Oh yeah. He called me and got blessed out pretty good for calling me about it. Yeah. So yeah, he thought that I was being, I told him, I said, number one, I didn't go share somebody else's information with somebody. You did. I said, I would have never known about it had you kept your mouth shut about the little money that you made, but you didn't. Right. But Tony, that was $100,000 lawsuit if that kid had just gone to tell what had happened to him. So he spared them that.
Hey, so speaking of the lawsuit, let me tell my little story right quick. God, it was 1988, something like that. I had moved to Atlanta. And I had this little Fiat. So the Fiat had given out on me. So I said, let me go get a car. I had the fee out all through college. And so I go get a car and I get it financed, a Nissan that was financed through, I forget who was financed through, but it was at a Pontiac dealership, but they had Nissans also.
Okay.
Found out later on, just, I don't know, that something they did wrong. I don't know what it was, but I went to attorney, told him everything. He said, we got it. We got a case. We got everything. Just let me handle it from here. If they call you, don't talk to them. Don't do anything like that. I got it. Exactly. I said, okay. So 2 or 3 weeks that went by, and he was talking about 100,000, you know, all that kind of money. 2 or 3 weeks that went by, and I answered the phone when they called. And he said, he said, my man, you know, and this was the owner of the dealership, a brother, brother. And he said, and he actually got a Benz dealership now in Atlanta. At that time, he had a Pontiac dealership. So he said, come by and let's talk about it. So the salesman I liked, who had really got me, but I liked him. So I went by to talk to him. We sitting around the conference table and we talking and all this stuff. And he said, man, you know, we did something wrong. I tell you what, but you know, he slid across a $10,000 check to me. Oh. I looked at the check. He said, well, if you sign off here, we all good. You know what I did?
You signed it.
I signed off. And I remember, so my attorney was getting like, I'll forget, 20% or something. So I remember, so I said he gonna get 2,000. So I remember going by his office downtown Decatur in Atlanta, and I showed it. He said, oh my God, man, I ask you not to do that. I ask you not to do that. We got 100,000. Right. And I was just thinking, no, I got 10 right here. And you know, so I gave him his 2. And Vince, I don't know what happened to the 8 grand. I know I parted. I just don't, I can't tell you right now whatever happened to the 8 grand, but it went fast. And it was dumb, it was dumb on my part to do that. Because the attorney said we had him.
Oh, you had him.
Yeah.
They had him.
Yeah.
They had him. But and Tony, so that speaks to a whole nother dynamic. There are so many rules out there. I'm gonna dispel one of them right now. Like, a lot of people think they got 3 days of rescission when they buy a car. They don't. When you seek out a dealership and go seek out the car that you want, when you sign paperwork, guess what? You own that car. When you drive that car off the lot, you own that car. If you don't drive that car off the lot, you still have 3 days of rescission. Again, you come to me to buy a car, you sign the paperwork, but you leave that car there, that car is not your car. So you can back out of that deal.
If you didn't drive it off the lot.
If you didn't drive it off the lot. But once you drive it off the lot. Now, the other part of that is, Tony, if you were actually doing a deal and you invite your salesperson to your home, to your office to come sign paperwork, you now have 3 days of rescission. You got 3 days of rescission to say, and that's 3 working days. Okay. So if it's on a Friday, they really don't consider Saturday a working day. So you have at a minimum till Tuesday.
I mean, but that's if you left the car. You never did pick it up.
No. So yeah, if you leave the car and don't pick it up, that's one way. If they come to your house and sign paperwork at your home, you also have 3 days of rescission. So even if you get the car, you still have 3 days.
But after 3 days is over with.
After 3 days, they don't have to they don't have to do anything.
But you initially started off saying that if you drive it off the lot, you don't get those 3 days, or is that
again? And I'll slow down just 1 minute.
Okay.
So if you come to me, Vince, I want to buy that Grand Cherokee right there. And I say, Tony, okay, let's go. He drove it, you like it, we set up the deal, you sign paperwork, and you drive off the lot. You have no days of rescission.
Okay.
However, if I bring that car to your door, to your home, And then I say, okay, Tony, you like the car? I'm going to set it up. I'll get the paperwork. I'm going to bring the paperwork back and I'll sign that paperwork at your house. You get the car and everything there. You got 3 days of rescission.
Wow. Wow.
And people don't know that.
I didn't know that.
So whenever they do that, if a person was unsure, they can actually just say, hey, look, just send the paperwork out here and I'll sign the paperwork at home.
Right.
As long as they take
anybody should, in my mind, say, if I know this, bring the car to my house and I'm gonna fill out the pay. I don't care if I love it, because I still want them 3 days.
You want the 3 days of rescission.
Yeah.
Right. And so that's
but wait a minute now.
Okay.
I was talking to CarMax the other day.
Right.
They said you get 10 days. If you go, they bring the car to your city, you go pick it up, you got 10 days to drive it, or if you don't like it, you give it back.
Now, keep in mind, that's their policy though. So we're talking two different things. CarMax, Carvana, all those different places like that, they have that rule that you can go 10 days and bring that car back.
That's their policy. The dealerships don't have that. Okay.
Most dealerships do not do that. And Tony, the reason they have it that way. Now, let me give you another example. Let's just say I have Tony come in, Tony buys the car. He's got a little bit of a glitch in his credit, right? So let's say I tell you, Tony, I'm not going to have a problem getting this deal done. So I tell you, we're going to sign this paperwork. And then all of a sudden the bank says, no, I'm not doing that deal. We call you back and say, hey, you signed a document stating that if we didn't find financing, that you would bring the car back. You don't have to bring that car back. That same rule I just said about you taking that car off the lot that day applies to you as well if they don't find financing for you.
So dealerships will allow you to sign and take a car even if they had found the finance?
It's a lot less likely now, but it can. Or it could even be they thought they had everything, all the steps that were needed. But if those steps didn't pass underwriting at the bank, then they can call you back and say, hey, I need more steps. Or you can say, man, I don't have to give you any steps. I already signed it. I already got the keys. You already got my money.
Okay. So then who finances it then if these banks turn it down and
the
dealer have to finance it?
The dealer's got to pay. Yeah, the dealer's got to do it. Yeah.
So really, I wouldn't. That's really difficult for a dealer. Why would they do that, knowing that they hadn't gotten the finances?
Again, I'm telling you, it's far less likely now because, like you just said, everything is electronic now. So with everything being electronic, they can kind of get an answer very quickly. But just say you're there late one night. Everybody's trying to go home, Tony. It's 10 o'clock. It closes at 9.
Right.
Sometimes things people get a little sloppy when that happens.
Right.
And when they do, they didn't cross their T's and dot their I's. All of a sudden, you got out. They call you back and say, man, we couldn't get finance. Hey, I don't care if you got finance or not. I got the keys. I gave you a check. I'm out. So you don't have to do anything. But here's the thing, Tony, most people don't know that.
Right.
So the one thing I say with schools, and you and I, because we've had those late night conversations that we have, right? There's so many things high school can teach us that prepare us to get out there in the real world. And I learned most of what I know about business in the car industry because it transfers to just about anything else we do, whether it be network marketing, whether it be, owning a business, all of that information transfer because it's dealing with what? Finance.
But here's the deal. Here's the deal though, Vince. We live in a capitalist society. So
exactly.
They're not going to train us on that. They're not going to teach us on financing or credit or
There you go.
taxes or none of that kind of stuff. So,
There you go.
you know, it's every man for himself and God for us all out here when it comes to that. But you're saying that a person, for lack of better terms, I'm gonna say you're saying that if they call you, they should be able to trust you to make sure that you're not gonna, because you know people say that too, and they still get got.
Right. No, you're right. And I'm gonna tell you who will get most people, Tony. Their friends, their brothers, their cousins. Literally, you got to have just a good sense of who you are. If you're building a business, though, if you get somebody, they gonna know they've been got. When they get away from the dealership and that all of a sudden that newness wears off, they're gonna be like, man, I could have got so much better deal. Or they're gonna pick up the paper and look at the paper and see what a payment for $299 and they paying $799. You know, so at that point it's gonna be like, yeah, I got, you know, but they'll never go back to that person.
All right, so when I think about car dealerships, and I bought a lot of cars, and I've always, you know, the sales, really, I dealt with one guy for a long time. And I just, you know, he's cool with me. So I think that everything is good. But I also realized, and he kind of told me this too. He made sure he told me that. He said, now, when you go in there and talk to that finance guy, you got to make sure you tell him, don't add nothing else. Right. I don't want, because he want to throw in everything else now. So you go in that little room. Right. When you go in that little room, is that the guy who makes the most money at the dealership, the finance guy, because he's adding on plans to the because he's sitting there doing the paperwork. Do you have a relationship with him, and have you told him before that guy goes in that room what you want out of this deal?
You coming strong now, huh?
I'm asking. You know what I'm saying?
Okay. Tony says there's some dealerships out there that when you go in there, if you don't know what you're doing, you're gonna get smoked. I'll be the first to tell you that, right? However, if you got a good dealership, by the way, there's a difference in the type of dealership that you go to where that kind of stuff can happen. If you're going to a Mercedes dealership, they got to be above board. Why? Because their reputation is worth something. Right. If you're telling somebody don't go there, guess what? That's going to go somewhere. And, you know, and by the way, there's so many platforms, and this is one of them, that a person can actually get on a podcast and just say, man, I went here and this happened. But when you go to a B lot, somebody got their own name up there. There's a chance that type of stuff can happen, because if they talk to the owner gonna clap his hands about them making the most money. Right. But if you come into a dealership that has you got to remember that name out there for Ford, GM, or Chrysler, they got somebody to answer to. And they can't draw down on them and actually take their dealership if enough bad things happen. By the way, another thing too, Tony, these grading systems that these guys have now have great importance. Whether it be you going to give somebody a Google review, or you go on there, you know, you'll get a survey from a Chrysler dealership, not a Chrysler dealership, from Stellantis, from Ford, or from GM. Those salespeople got to answer for that stuff. So to answer your question, that person in that finance office has to be on their best behavior, and they have to explain everything that they buy. So,
well, yeah, they do that, but the way they explain it, like I know some of the guys who, you know, they're smooth operators in that room. So let me ask a question this way, okay? Have you ever got upset with a finance guy because You sent your guy in there, and the payment was $399. He
Right.
came out of there. Now it's $499. It's another $100 on top of that. Have you said something to the finance guy like, why you jack this man up like this? Or did you get extra money for him adding that $100?
So the answer to that question is twofold, but I'm gonna give you the direct answer. Yes, I have gotten fired up with somebody early in my career because they did something, and it was known in our industry called a slam and jam. Right? You slam somebody and you jam them, right? And they did it, Tony, to particular groups of people. Your people who kind of knew their way around it didn't get caught in that web.
Right.
We got somebody who didn't know a whole lot. And by the way, the government didn't stand up either, because when we talk about that, we say it's called buyer beware. So you can leave when you go there, you got to have your stuff in order. So now my son is a finance officer, right?
Okay.
My son says, I don't care if you tell them or not. When they come in, I've got to do everything exactly the same way. He had a video camera up in his office that showed that if someone tried to say that they didn't know about it, whatever. So good places, that's what they do, because they don't want anybody running around town saying, hey, when you go out there, it ain't the salesman that's going to get you. It's that guy in the finance office.
Right. I've always heard that. Have you ever told a customer how to handle that guy? Do you say, hey, man, when you go in that room, only take this? Have you ever told him that? Because a lot of times people don't know, man. You go in that room, the dude he's smooth.
Right. It's on occasion, yeah. I would say this though. In my last 13 years in the business, Tony, I haven't had to, because I know they're going to get explained to the warranty, and they get a choice to say yes or no. By the way, if they decide not to take a warranty, they're going to have to sign a document stating that it was offered to them, because they have to offer it to every single customer. So if you're sitting at my desk, I say, hey, listen, when you go in the office, they are going to offer you some protections for the investment that you just made, right? If you decide you don't want it, make sure you let them know that.
Quickly, I want to talk to you guys about a foundation called Viva Se Amina. This foundation is dedicated to improving the mental health of eliminating the stress and anxiety that happens when athletes transfer to meaningful career opportunities after they completed their time in sports. The foundation believes in empowering these athletes to drive beyond the field, court, or arena. Because that transition can be overwhelming sometimes as they navigate the shift from, having a spotlight as an athlete to uncertainties of post-retirement life. So your support is very instrumental. Check us out. Every donation directly impacts these individuals. So go to this link and check it out. Thank you.
That's the way I explain. I'm very professional about it. Seriously. I don't play with that, because I know that when them people get in there, I said, they're going to do their job, and they're going to offer you everything they offered everybody that came in there before you. So your guy that said that to you, Tony, let's say you walk out of that dealership and 2 weeks from now, your engine goes out, but he told you not to buy a warranty on that car.
Well, he told me to get that. He said nothing else. Okay. If he offered, get that, but nothing else. All the other little stuff that he said, don't do that.
So the other thing is, there's another program out there called GAP, right?
Yeah.
Do you know what GAP is?
Yeah, I know the GAP insurance. Yeah, the in between.
GAP insurance. If you go in and you lease a car, every lease car has GAP. You know why? Because that manufacturer's name, not the manufacturer, but the bank's name is also on that contract. So they're equally yoked on that contract. That's
so
the reason.
Let's talk about that right quick. Lease or buy? What are you telling people when they come in?
All right. So that in Detroit, we're probably in the most heavily leased area in the country, right?
Why?
It's two reasons for that. Detroit, they like the big ball, right? So they can either go in and get a little car to go to work, or they can get a lease car and they can go big balling,
Okay.
right? Because normally a lease payment is less.
Okay.
But if you came to me and you said, Vince, should I lease or should I buy? Tony, because I know you've always been a business owner, I would say, Tony, lease a car. It's a depreciating asset. So lease it so that in 3 years, you're not spending all this money on upkeep on that car. So
what about the mileage? Because if you
the
drive a lot,
mileage, not right. However, you do realize no matter what you do with mileage, Tony, it's costing you. If you own a car and you put so many miles on it, you've devalued that vehicle. If you lease a car, you use the amount of miles that you need and you turn that car in. You lost the same amount of money either way. That's the reason why if you lease and you put your miles up there, the company actually charges you more, because that car is worth less with more miles on it.
It's got to be a rarity that you have somebody come in there that's not upside down on that car. Most people come in, they got to be, and they take that back end, that upside down, and put it on the back end of the new car. Is it, how many people you've had? How many people you've had come in your career, percentage, that wasn't upside down on a car?
That wasn't upside down?
Yeah.
Probably 20%. That was not upside down.
That's high. That's high to me, because I'm thinking everybody is, you talk about people who just parked the car and it's been in grandmama's garage or something.
Right. Let me explain it, Tony. The number one reason most people come in are upside down is because of financing. And let me tell you why. More times than not, in the olden days, your parents and my parents, when they went in, they always had to put down 20%. There was no exception. They had to put down 20%. When they put down 20%, they were kind of vested a little. That kind of
covered it.
It kind of covers that, right?
Yeah.
So as time went on, it got out there. Don't put any money
nothing down. Yeah, don't put nothing down.
You don't want to put the money down. But here's the thing. So when you come in to see me, remember, this goes back to our finance, the situation that I was just talking about, where they don't learn this in school. When you pay back the bank, right? The bank wants what back first? Interest.
Interest. Yeah, they get that first off the top.
So if I got somebody that got 15% interest, they got a $300 payment. $250 of that is going to what? Interest.
Probably first year. Yeah.
In their first year,
yeah,
that bank is gonna get back
the money back.
I got a guy, Tony, that came in. I told this guy, and most people might not believe it, but I told the guy, this is not a deal that you should do. This guy was trading out of a car, trading into this car. This guy's payment went up to $715. He came back to me in about 3 months and says, man, I'm pissed. I said, why? He says, because look at how much interest I paid. Out of his first payment of $715, $690 went toward the bank. I says, you know why I can sleep at night? Is because I told you not to do that deal. I told you it was a bad deal for you. You're trading out.
But he just wanted the car so bad. I mean, it was like he just had to have it.
Exactly. There's no reason in the world, dude. This guy was trading a Honda for a freaking Jeep.
So it's pretty much almost like the way when you go to the grocery store, you want to already eaten, so you're not hungry. So when you come to the car dealership, you kind of want to be well, I can take it or leave it. But if you come in there and you know you got to get a car, then you could get taken advantage of.
If you come in there and you got to get a car, I'm gonna tell you, hope you run into somebody like me, because I'm gonna try to do everything to keep you up. Because Tony, this conversation go on a long time because so much has changed in our industry. You got regular banks like Chase, you got regular banks like Fifth Third or Chrysler. Where every one of them banks now have a subprime division. And in that subprime division, they're saying, okay, we want some of that low FICO score people too.
Right.
So the lower your FICO score, the higher your what? the higher your interest rate.
Interest rate, yeah.
Tony, you know, at one time it was against the law to charge somebody 25%. They call that loan sharking.
But
right?
they do it now.
Right now they do it. Well,
What's
here's
up?
the
Yeah,
other,
go ahead.
go ahead. Go ahead.
What's up with the 7 and 8 year payments now?
Because the cost of cars are going up so high that people can't fit that into their normal budget anymore. Because one is happening there. Interest rates right now, Tony, you can have coming there with an 800 score. If you don't have, you know, a bank that you know of, you're paying anywhere from 6 to 9%. And you can argue about it, but we're not the bank. When you come in, my only job is to get you hot on that car. My finance job is to get you a suitor for your credit. So, and once the suitor finds your credit, now you may already have found a suitor for your credit. So that, and when you go in, I can use that to go to the bat for you. And by the way, here's the other thing, Tony. I'm not going to be all over the board, but when you come in, if I don't sell you a car, I don't make money.
Right.
So whose side am I on? I'm on your side.
Your side, yeah. Yeah, because you got to get, you want to get that car sold. Yeah, yeah.
Because I don't get paid just to sit there and dial numbers. I got to get paid for what they call moving steel.
Right.
Right. But you know what? When I come back with a customer, I tell them that. I said, you do know if I don't sell you a car, I don't get paid. I said, so whatever you need me to know, you need to let me know that so I can go to bat for you. Right. And I wouldn't care if every owner of a dealership was listening to me, but he knows I'm telling the truth. He doesn't pay you to sit there. He pays you to produce.
Right.
So when you come in, it's better for you to meet somebody that takes this serious and not just moving around from dealership to dealership. So I want you to know about financing. I want you out of that car faster. So back to your original question about leasing and buying, a lease definitely turns you around a lot faster. But in most cases, Tony, a lease is the right thing to do for the person. Not in all, but in most. Because that eliminates a lot of anything other than oil changes, you know, or normal wear and tear on cars. Most people's lifespan to want to be in a car is no more than 2 to 3 years because of technology and because of styling. So when somebody comes in and say, I want to own it, right? Well, 84 months later, you can own it. You're going to get tired of it far sooner. When we go back and we talk,
it probably won't be worth as much. Well, I know it ain't going to be worth as much.
No.
Yeah.
No. Because the lifeblood of any car is what? How many miles you put on it. So, Tony, something you just said made a lot of sense, right? So you, at that point, what are you looking at? Is ownership is a figment of the average person that's driving the car's imagination. Because they're going to come out of a car, pay all that interest up front. And when you said that upside down, they're upside down because the bank got most of their money back in the first 3 years.
Yeah. Your
car was devaluing because you put miles on it. Now you at a point and you didn't put any money down, and people finance not just the car, they also finance what? A warranty in the back.
Yeah.
They also finance gap insurance.
Right.
What else do they finance, Tony? They finance the tax on the car because you know the government ain't gonna let you out of it without paying tax on it.
Right.
So if you come in with no money, all of those things that you put on there is not the value of the car.
Hey, but you driving, you coming up out.
There you go.
Yeah. But then that gets old. That gets old. Yeah. You're like, God dang. So what have I done?
Now, when I see astute people come in, they come in with half the money down on the car.
Right. That's another question. Over your years, and how long you been selling cars?
I've been selling cars for 34 years.
How many people have you had that came in with the exact amount of money in a check and they said, I ain't going to that little room back there? Here.
Right.
How many people have you had done that? Not having their own financing, but having their own check that they already checked everything out. This is how much I got, and that's the car I want.
That's not happened that many times, Tony. Maybe 5 times in my career.
Years. Wow.
Yeah, maybe 5 times. The average person that come in to buy a car is going to finance it.
Yeah,
they're going to finance.
Okay, how many come in with their own financing then?
A lot. Now, I would say maybe 5 to 6%.
They come in with their credit union. Okay, my credit union says
credit unions, right? Yeah, right. Credit unions. But got to remember, we're in bed with credit unions too.
Now. Right.
So they got these different things, these different like credit unions want to be acknowledged, where when everybody's out to get a piece of everybody's business. So credit union says, yeah, I know I've got my own people coming to me. However, if I put my name in the hat at the dealership, I can get some extra business there too. Because they all want that extra business. You know why they put everything at the checkout. Mm-hmm. You know, you can find fingernail files, candy bars, everything. They sell so much stuff. So that's the same thing the credit unions are doing now. Now, credit unions right now are ahead of banks right now because they control their own rates. The Fed controls the rates at the bank.
Right.
But the board of directors control the money at a credit union. So people are starting to look around, you know, a lot of different services out there right now. So Tony, that brings us back to really the education. Mm-hmm. Your children, my children need to know what, in the event that we can't go with them, what are you doing? I applaud every kid that comes in and they got somebody that they can call to kind of verify what I'm telling them.
All right, here's my question to you. Vince McCarver, you in Michigan.
Right.
People in Atlanta go and look for cars. Why should they call you if you online in Michigan and they looking at cars here? Why should I call you? I got a guy right here. What are you gonna do that they're not gonna get?
Because I know I have very little or no control over that guy. Mm-hmm. I got to sell him on and give him a lot of the information that I'm telling you. I got to give him the behind the curtain shit. Mm-hmm. Excuse me. But you know what I'm saying?
Yeah.
Hey, you got to watch out for this guy. You got to watch out for that guy. You know, when they come in there, this is what they're going to do, and it's all about keeping the ball in your court.
Uh-huh.
So, but Tony, I might not be able to help a person from Georgia for this reason. Y'all got some crazy tax stuff going on in Georgia. Okay. So if they come buy a car from me and I tax them, they're going to get taxed again for buying that car outside of Georgia. So a person really, so they really got to research what they're going to do.
Georgia, they gonna get you. They know how many people moving to Atlanta, and so they got that thing set up, man. It's crazy how they do it. Even with the insurance, it's just crazy. It's almost like you're not gonna move here and try to live somewhere else or try to use other, ways of doing stuff. You got to deal with us, and
you got to deal with them.
Yeah.
Unless you have a outside address from Georgia, you paying.
Right. But they even tried to use that. They even try to use that with insurance. If you got it, if you live in here for a month or something like that, I don't care if you got address at mama house or your uncle. Right. You paying for insurance right here. I don't know how many times I've tried to do that. They you're not doing that.
You're not doing it.
Yeah.
Yeah. They know they got somebody from the street, Tony, just like we do with somebody with the inside information to tell them what we're doing, man.
Yeah.
And so, but when you get in the business, Tony, a lot of the reasons why people get, it's a bad name that car salesmen get, because they don't do what a lot of them do what I do now because they're career oriented. But a lot of them is kind of like they try to do everything to knock somebody's head off when they come in. And those people are very short-lived for any one dealership or any career in our business, because we got long hours, and we got ups and downs. Are we going through a downtime right now because of Stellantis?
Well, that's another question. From the talk from Forbes magazine, Forbes online, and a lot of other things that I see out here, and the way you feel too is that the economy is bad. People are not making the same amount of money that they used to. So how does that affect the car business? Are the numbers down there too? What?
Absolutely, man. I know some dealerships that was doing at one time a couple years ago was doing 400 units a month. They're down under 100 now.
Wow.
Because a couple of different things happened. That chip shortage hurt us a little bit. COVID obviously set a lot of people back. But Tony, here's the thing. This inflation is a real thing. People are looking at the price at the pump is so much higher. The price to feed my family is so much higher. So it leaves little discretionary income to go get another car. And if you do get one, you're going to end up getting, I just need to get what I can get now. So.
Well, let me ask you this. This is going to be like a off the wall question. And it always comes with a debate. This will probably be the most, in the comment section on this question here. Was the interest rates better when Republicans in the office or Democrats? What do you sell more cars?
Hey, listen. Okay, so the straight answer to that question is, it's been the interest rates are higher with Biden in office right now, for sure. I know, but
does that have something to do with other things, not just?
It has something to do with other things. So they blamed it, Tony, on they needed to raise the interest rates to slow down inflation. I don't understand how these guys come to that decision on what to do, because if a person can buy a car at 2%, but they won't buy one at 10%, okay, how are you helping the economy? And nobody's actually explained that to me yet. So it has nothing to do with either Trump or Biden or Obama.
Okay. But I'm talking about over your 30 years. I'm not talking about Trump and Biden. I'm saying over your 30 years, when a Republican is in office, is the interest rate better, or when a Democrat is in office, is the interest rate better?
Okay, Tony. Before the interest rate just went up after COVID, we had 1% finance, 0% finance, like 2.9 finance. Credit unions was doing like 0.5.
Okay, but was that for 10 years, 5 years, or only when Trump was in office?
That was back for 15 years. That's how people could lease cars in Detroit. It was nothing to go in there and get a car lease under 300. You can't touch the smallest car under 300 right now, not without a lot of money out of pocket, because the money factor.
Okay, during that time, now we talking about what? 2000 all the way to 2008 was Bush. 2008 to 2016 was Obama. Then Trump.
Right.
So you've been doing this 30 years. So from 2000 for Bush, those 8 years, and then 2008 to 2016 for Obama, those 8 years, was the interest rate different with Bush compared to Obama?
It was about the same.
Okay.
It was about the same. That wasn't something. So it wasn't. Because we rode a roller coaster straight uphill with as low as interest rates were. I mean, people would come in and trade their cars. People was doing everything from, I got with this dealership in 2011, right? Interest rates from 2011 all the way until probably about a year ago was under 5%, no matter where you went, unless you had troubled credit. It was under 5% everywhere.
And now?
And now you're lucky if you get 5%, and you're probably more, the average is probably somewhere around 7 to 8. Tony, when I first, I would say the average lease, and I'm gonna go leasing because we do 90% leasing in our store.
Mm-hmm.
The average lease was probably somewhere between 290, 390. The average lease now is 700.
I heard that they saying the average car payment is 700. So that lease or
average car payment and that, is $700
for a Buick.
Man, if you come in, it's a rabbit hole to go down. I'm not gonna go down it.
Yeah, right.
When you come in, if you are 800 score, Tony, that's not even a guarantee for you to get under 5% with an 800 score. And there's very few 800 scores out there.
So it's people out here driving Buicks. There's people out here driving Buicks for $750 a month.
Yeah. And the demographics on Buicks are people who are higher educated. But it doesn't change when they got to go to the bank to get their money. And so all the things that people used to do, they're not really doing it anymore. What people are doing, though, Tony, is that they're not buying cars like on the regular unless they need it. They're not coming just to trade their car just to say, I'm tired of my car no more. When they come in, motor is blown, I got a couple of new drivers in the family. Somebody just turned 16. That's the reason I'm seeing people come in. Now, the people that are in their leases for 3 years, those leases are coming due. Guess what? They're either looking at buying that car or they're biting the bullet.
Mm-hmm.
They're biting the bullet. So I'm not sure about Atlanta. I don't think they lease a lot of cars in Texas. So it's different.
Mm-hmm.
Every demographic and every area is different. Right. But the things I'm sharing is to educate yourself before you go sit down or get with someone that has an education.
Right. On cars and finances.
On cars. Because go ahead.
No, go ahead.
I said, because if you don't, interest rates is a fee. And the thing I want to do is train people on how to keep their credit in good order so they don't have to experience borrowing money at a higher rate. And Tony, it's not even fair what they do to people. They call themselves trying to help people out of a distressed situation, but they bury them deeper. Because when you charge somebody 25% and you give them a car with, high miles on it, guess what you're doing? You're burying that guy. The car might not last the term that you have on it. So it's just something that people really need to understand when they go in there.
But it's almost like a catch-22 because that guy has to get a car. He has to drive.
He's got to get a car.
Right. So even if you educate him, how are you going to help him?
So, okay, this is how I'm going to help that guy. Hey, listen, Tony, I understand where you're at now. I know things ain't always going to be that way, but you had good credit at one time. Let's get you back to that point. Here's the thing I need you to do. You got a 520 score right now, Tony, but here's some things that cause that 520 score. So I need you to fix those things over the next 6 months to a year. But
that was my question. But Vince, he got to drive.
He does have to drive.
So what do you?
No, I'm giving him a car. I'm saying,
but you having him fix it during that time. Okay, while he driving.
Yeah, because once they get to that point where they need a car, you absolutely right. They can't keep their job if they ain't got a car.
Right.
So trust me, there's a lot of banks out there right now that will give you a car. They're going to charge you 25%, and they're going to ask you for a lot of money down.
Right.
And most people go, you know what, Tony? It seems like they can't come up with it, but they come up with it because here's the thing. I got to get to work.
Yeah.
My life as I know it is not going to go the same way if I don't have a car to get me to and from. So when you're training them on credit.
So in the next year, you're teaching him how to get his score up. Now, is that the goal so he can come back and flip that car in?
Yes.
Okay.
Well, there's two parts of that, and this is not something that somebody else is going to tell you. If you came in and your credit was a 520, I got to send you to a subprime bank. Tony, I'm gonna tell you that I don't want you to spend your income tax check. I want you to put that on your car, because see, you paid the bank back that 25% that you owe them, but your car is still the same car you bought, and you still owe the same on that car that you bought. So I need you to get that down if you expect me to help you trade out of it. But at the same time, I need you to get your credit in order, so when you come back, I can get you into a conventional bank versus a subprime bank. Because subprime banks they're gonna smoke you at every turn.
Right.
Period.
Right. So what's your percentage of people listening to you? So if you training them and do you follow up with them? Are you talking to them about? Okay.
Yeah, I got a lot of people. Listen, this year especially, because everything is so tough, when they come in, I say, look, I don't want to put you through a subprime bank. Let me try these other banks and see if I can get that. Hey, by the way, can you get me somebody that would go on this contract with you? Okay. So that brings a whole nother subject matter in. Like, if you're coming in to sign for your son, and you put your name on the contract, you got a lot of control over what he does, right? If you keep him in good standings for a year, you can go in and say, we want to refinance this, but we want to put it in his name only. Now, remember the way I just said that. Not take you off. We need to refinance so that he could be on this loan now on his own, and y'all can get my whole name back.
When you get a cosigner,
are
you looking at the cosigner's credit, or are you looking at the income of the cosigner?
I'm looking at both. I'm looking at a cosigner's credit, because the person that I'm talking to don't have good credit, chances are, right? Well, I want that cosigner to be twofold. One, I want him to be an educator, because his name is at stake now. So I got somebody I was talking to the other day, and she got a situation going on, and the person that she signed for ain't paying the note. I said, you got to pay it. That's not what I signed up for. If you put your name on that contract, that's what you signed up for.
Right.
And when they take that car, not only do they ruin your credit, they're going to go back after your income too. So,
what if this is my last question too, because I know we've talked a long time. What if you have a person that cosigns and has excellent credit, but not making any money? Like they're not working, or they don't have any money coming in, but they got a 780 credit score.
Well, in order for them to be on that contract, they got to have some money coming in. I mean, they just not going to have a 700 score when they don't have any money coming in, because they haven't generated anything out there.
I'm saying, like, they've already built up their credit. Their credit's good, but now they got laid off. They don't have any income coming in. But
they're not going to let them cosign, Tony. If they know that, they're not going to let them cosign. In order for that to happen, that person has got to fib a little bit by saying, no, I'm still working. And the chances are that gets to another point, because they may have a step to ask. So what that means to you is, if you come in and you got laid off, you've been laid off for 2 months, right? You got an 800 score because you pay your bills. All your bills have not suffered.
Right.
They're not going to ask you to prove your income, and they're not going to ask you to prove where you're working.
So you just tell them.
So when you tell me that,
I'm working.
then
Yeah,
I'm just gonna put that information down.
I got you. I got you.
Okay. So because you're co-signing, right?
Right.
But the other thing that matters, you're not going to co-sign for somebody that you think is not going to pay the bill.
Exactly.
Everybody's intention is to do that. But again, Tony, everything. So we're going to sum up everything right now.
Things can happen, and
without question.
Yeah.
And this, I mean, like I say, this conversation can go on for another 8 hours because there's so many different things that I've learned over the 34 years. But the biggest thing is it's got to start with education. You're responsible to teach your family the right on finances because it's not how much money, Tony, me and you said this a long time. Well, you and I have said this a long time. It's not how much money you make, it's how much you keep. Right? You got to be a good steward of your money. Now, here's something that people can get a lot of mileage out of. Credit Karma is a great source of information to keep your credit on top. A lot of people believe in the little numbers that they give them. Those are hardly ever accurate. But when it comes down to them telling the things that they tell you can do to improve your credit, they don't lie. They don't have a vested interest. They don't make any money off of that.
Right.
And I just learned today the way they make their money is when they get your credit in order, there's so many credit cards that they tell you can go get.
Right.
And they get paid a stipend for doing that.
I got you.
For doing that.
So their job is really help you, even
their job is to help you,
to
let you know that there's a class that you can take. The number one thing you can do to make sure that your credit stays on time is pay your bills. And pay them on time. Because it's more about, Tony, the fact that you signed a contract in earnest and you went back on that contract. They don't care why you went back on the contract. The average person, when they don't make a payment, they don't even call the company. When they know that calling the company can say, hey, look, I fell on hard times. My health failed me. I don't have any kind of savings right now. I can pay you this right now, but I'll get back on track because I'll be back on my feet. That right there in itself they'll note that in your file, and they won't use that against you. But when you go and you don't pay them, and then you become ghost, and you go 3 or 4 months, then at that point, it's anybody's guess what they're gonna do.
Right.
So
you're saying if they're low on finances, they can't really make a payment. If they call the finance company and say, look, this is what's going on with me. Will they take will they take anything that you want to send them? Like if your payment is $400, you say I got 100.
Yeah, they'll take a partial payment. As long as when you get that, Tony, and if you talk to them, now not in every case, some people just go, they're strict orders to do it just this way.
Right.
But for the most part, it'd be like somebody that borrowed $20 from you. If they called you and they said, I'm gonna pay you back Friday, but they call you Thursday, hey Tony, I need an extra week, man. I didn't know, something came up, but I promise you I'll have it to you next week.
Right.
When he paid you back, guess what? If he needed it again a year from now, your thoughts is like, this dude paid me back.
Yep. I got you.
Well, the banks are the same way. As long as if you tell them something and you hold up your end of the bargain, they're going to be there.
Because they figure, I guess the banks figure, if I don't do something and let them take it, I'm gonna lose everything. So whatever you send me, you kind of still in the game. I got you. Instead of just saying
a little bit of something is worth a whole more than a whole lot of nothing.
Right. I got you.
But Tony, I really do think that we can probably have this conversation again and cover some other questions because you know what? Our community is probably worse. Number one, they've been targeted more. The reason I say that is there's these buy here, pay here's. They let them sit right in the middle of our neighborhoods.
Yeah, exactly.
But think about this: you would never go to another neighborhood and see those cars there.
Right.
Or see those there.
You pay weekly.
You won't see those liquor stores there either.
Some people will say that it's helping our people because nobody else would do that. They pay weekly and they do all that.
Now that comes down to motive. when they're driven by money, then the motive that they have is to get whatever they can. I've seen people go in there and leave out with a car that's broken and want to go back and say, hey, look, I just want out of the contract. We're not doing that. And most of the deals that they do, Tony, are in cash. And they're not giving you cash back. Because I know way too many people has actually done that. But there's some stores out there that got a big name for themselves, and we'll talk about that at another day. They got big names for themselves that people can go to and get a decent car. They don't have any bullcrap cars on their car. The ones that those guys bought at the auction, these guys didn't buy. They wanted good cars, and they own their own financing. They'll give you finance as long as you have a job and you come there in earnest. There's some companies out there like that. There's some companies out there like that. They own their own banks. So, but our education got to step up.
We're gonna do this again next month sometime. We'll have some more questions that we can talk about, Vince. But I appreciate you for coming on. And what's your last thing you want to say when it comes to education on this?
I just say, get with somebody that know. Hey, look, if you got, you don't go to a dentist and ask them about a law. You go to a dentist to get your teeth cleaned and get your teeth serviced.
Right.
But if you find somebody in a car business that's not just trying to take you for a ride. Find somebody that either somebody that knows how to buy cars or somebody that's, there's a lot of people that education's, Tony, that's coming up now that people can go to. And I'm going to tell you again, CarMax is one of them. There's always some information out there on what to do. YouTube is another good place to go out there and kind of find out, what to do. But again, when I get a call, I just handle that call that way, whether I'm selling them a car or not.
Right.
So
I got you. All right, man. We appreciate it. Look, it's been another episode of Elite Psyche. This one is sponsored by New Spira, where better matters. And it's a new company that's starting up. And, they actually sponsored the show. That's why I have the shirt on. Great company. So check it out. And appreciate it again, Vince. And make sure y'all like and subscribe, man. We're over 10,000 subscribers now. We need to get a lot more, but make sure you like, subscribe, comment, do whatever you want. But, let's do it.